Welcome to PortfolioCasts, the podcast where we break down real investor portfolios.
In this episode, we're exploring Howard Marks from Oaktree Capital Management's portfolio, the key holdings, the concentration, and the thinking behind it.
When you look at the heavy hitters in the hedge fund world, Howard Marks is always at the top of the list. His work at Oaktree Capital is legendary. Right now, we are looking at a portfolio worth over $14.1 billion. That is an incredible amount of capital under management.
It really is, Sarah. Marks is the master of second-level thinking. He doesn't just look at what a company does. He looks at what the market is missing. Currently, his portfolio is up nearly 200% overall. That 198.4% gain is just staggering. It shows his mastery of market cycles.
We have to start with the most explosive move in the recent data. He has gone incredibly heavy into Indivior plc. This is a company focused on addiction treatment. The position size is now worth over $8.9 billion.
That is the most aggressive ad I have seen in a long time. He increased the position by over 2,241% recently. Even though it only represents a small fraction of the total allocation at 0.2%, the sheer number of shares is wild. He holds over 257 million shares.
The performance is what catches my eye. The overall gain on this position is listed at 86,300%. Mike, how is that even possible?
It suggests he got in at a literal floor or through a distressed debt conversion. That is his bread and butter. Right now, the stock is trading at $34.56. It saw a slight dip today of about 2.5%. But when you are up that much, a daily fluctuation doesn't hurt.
The fundamentals are interesting too. The price-to-earnings ratio is sitting at 34.5. That is a bit high for a value investor, isn't it?
It is, but look at the earnings per share. It is at 98 cents. The 52-week range is also very wide. It has swung from $7.62 all the way to $38. Marks is clearly betting on the long-term recovery of their core business model.
Let's pivot to a much larger piece of the actual pie. TRMD plc makes up 17.6% of the total portfolio. That is a massive core holding. It is worth about $911 million.
TRMD is a major player in the shipping industry. Specifically, they deal with refined oil products. This is a classic Marks play. It has a very low price-to-earnings ratio of 8.3.
And that dividend? A yield of 8.95% is massive. For a $14 billion portfolio, that generates a serious amount of cash flow.
Exactly. He hasn't made any recent changes to this position. He is just sitting back and collecting those checks. The stock is currently priced at $22.46.
I noticed something strange in the technicals for TRMD. The 52-week range is listed between $82 and $169. But the current price is only $22. That suggests a massive price correction or a significant capital restructuring.
In the shipping world, that usually means a major shift in spot rates or a fleet revaluation. But Marks is holding steady. He is up about 9.2% overall on the position. He clearly sees value where others see volatility.
It takes nerves of steel to hold a 17% position through those kinds of swings. But that brings us to our third stock, Garrett Motion Inc. This one makes up 9.2% of the portfolio.
Garrett Motion is a fascinating industrial play. They are huge in the turbocharger and electric boosting space for cars. The position is worth about $595 million. Interestingly, Marks actually trimmed this position recently.
He reduced it by 13.55%. Why would he pull back now? The stock is up 2.84% today.
It might be simple profit taking. The stock is trading at $18.68. That is right at the top of its 52-week range. The high for the year is $18.42, so it's actually breaking out.
So he is selling into the strength. That fits his philosophy of not getting too greedy. The overall gain on Garrett Motion is 37.1%.
The fundamentals support the growth too. The price-to-earnings ratio is a very reasonable 11.1. It also pays a modest dividend of 1.43%. Recent news suggests their core business is strong enough to allow them to chase new opportunities in the electric vehicle space.
It is a mix of styles here. You have the massive bet on Indivior, then the high-yield shipping play in TRMD, and finally, the disciplined trimming of an industrial winner like Garrett Motion.
It shows he is active. He isn't just a buy and hold investor. He is constantly adjusting the weightings. He manages risk by taking chips off the table when a stock hits its ceiling.
I am still stuck on that Indivior move. Adding over 2,000% to a position is a loud statement. He is basically cornering the market on that stock.
It is a high conviction move. When Howard Marks sees a price-to-value discrepancy, he doesn't just nibble. He bites. The fact that he owns over 257 million shares shows he wants a seat at the table.
And with a total portfolio gain of nearly 200%, it is hard to argue with his timing. He seems to be navigating this current market cycle with a lot of confidence.
He really is. He is focusing on companies with solid earnings per share, like TORM's $2.70. He wants tangible value. He isn't chasing hype. He is chasing cash flow and distressed opportunities.
We've spent some time on the massive foundational pieces of this portfolio. But Mike, as we dig deeper into the remaining $14 billion, I'm seeing a real focus on energy and materials. Expand Energy Corp is a standout, isn't it?
It absolutely is, Sarah. Expand Energy Corp, or EXC, is actually the largest holding in this specific list at 11.3% of the total portfolio. That is over $520 million in a single position. It's trading around $102.84. Interestingly, it has a price-to-earnings ratio of 28.3.
That seems a bit high for a traditional energy play. What's the draw there?
Marks is likely looking at the cash flow and the dividend, which is sitting at 2.26%. Even though the overall gain on this position is slightly down at negative 3.2%, the recent daily movement was up over 1%. Energy stocks have been volatile lately, but this is a core conviction for Oaktree.
And speaking of conviction, I see a lot of gold and mining here. Anglo Gold Ashanti caught my eye.
Right, Anglo Gold Ashanti is a 6.2% allocation. That's worth about $404 million. Marks actually trimmed this position by 15% recently. It's had a massive run, though. The overall gain is over 37%. It's currently trading near $96, which is right at the top of its 52-week range.
It sounds like he's taking some profits while the sector is hot. But then he's adding elsewhere. Look at Viper Energy.
Exactly. Viper Energy, or VNOM, is a 5.1% position. It's a relatively new buy for the firm. It offers a solid dividend yield of 3.61%. Even though the position is down about 4% overall, the daily change was positive. Marks is clearly comfortable buying into weakness when he sees a 53.3 PE ratio that he believes will normalize.
Let's shift gears to something a bit different. Telephone and Data Systems has a massive dividend. Over 7%?
It's actually 7.57%. That is a classic Howard Marks income-seeking move. This is a 3% allocation, worth about $155 million. The stock is trading at $42.18. It's up 7.5% overall for the portfolio. It shows that he isn't just looking for growth, he wants that steady yield.
I also noticed some aggressive moves in the utility space. Talon Energy Corp had a huge increase in position size.
A 124% increase, to be exact. That is a major add signal. Talon Energy now makes up 2.6% of the portfolio. Even though they are currently sitting on a 13% loss in that position, the sheer size of the buy tells you they expect a turnaround. The stock is trading at $369. It has a high PE of 75, so it's a bet on future earnings.
What about the tech and infrastructure side? I see Nokia and even some crypto-adjacent names like Core Scientific.
Nokia is a steady 1.9% holding. It's worth about $123 million. It's been a great performer for them, up nearly 37%. Then you have Core Scientific, which is a 2.4% allocation. That's a over $111 million bet on the infrastructure behind digital assets. It's currently trading at $17.48.
It's interesting to see him balance these legacy industrial names with things like Core Scientific. But we have to talk about the international exposure. Ikaw Unibanco and New Holdings?
Marks has always been a fan of emerging markets when the price is right. Itaú Unibanco is a 2% position. He recently added 15% more to that stake. And New Holdings, the digital bank, is a new buy for them. It's a 1.5% allocation. It shows he's looking at the modernization of banking in Latin America.
We also saw some wild movement in SunOpta today. up 13% in a single day.
SunOpta is a fascinating one. It's a 2.6% allocation, worth $87 million. Despite that 13% jump today, the position is actually down 28% overall. The news suggests the rapid growth is coming at a high cost. It's a volatile play, but at a price of $4.22, Marks is holding firm.
Before we wrap up, I want to mention Liberty Latin America. He nearly tripled that position?
He added 186% to the position. That is one of the largest percentage increases in the entire portfolio. It's now worth $48 million. It's currently down 14%, but when Howard Marks triples down on a loser, he's usually seeing a value gap that the rest of the market is missing.
That really brings us back to his philosophy of second-level thinking. Looking at this $14.1 billion portfolio, it's clear he's not following the crowd. He's deep in distressed debt, energy, and international value.
And with an overall portfolio gain of nearly 198%, it's hard to argue with the results. He's managed a 0.18% gain just today across $14 billion. That's a massive amount of wealth being managed with incredible precision.
It really is a masterclass in risk management and patience. From the huge stakes in Expand Energy to the tactical buys in digital infrastructure, Oaktree continues to be a bellwether for value investors everywhere. Mike, thanks for breaking down these numbers with me.
Always a pleasure, Sarah. It's a fascinating look at how the pros handle a cycle.
And that brings us to the end of our deep dive into the Oaktree Capital portfolio. For Mike and myself, thank you for listening to this special analysis. We hope these insights into Howard Marks' strategy help you navigate your own investment journey. Have a great day and happy investing. Thanks for listening to PortfolioCasts.
This content is for educational purposes only and should not be considered financial advice.
Any figures, prices, or portfolio values discussed are approximate and used for illustrative purposes only.
Follow PortfolioCasts for more investor portfolio breakdowns.